In terms of that, though, like the differences between when you started your career and you're starting your career as a trader in the pits and within that energy in the room and the other traders in the room, you're able to read the order flow in the room because it's happening there and then in the room versus today where you're trading from screens remotely. If you want to read the order flow, you're using like level 2 charts, for example. You're not really getting that emotion, direct emotion. But as someone with your experience, potentially you're getting that from the actual candlesticks and the way that the moves are printing within the technicals versus what it used to be
Correct.
in the pits. Is there similarities that bridge the two?
Well, yeah, there is. There is. Again, the specialist system was prominent. They dictated the flow. They had to buy and sell orders that were above and below the market on what's called a specialist book. And, depending on the level of player you were, i.e., the size of the order flow you used to have, when you went into a specific trading crowd, you want to know where the supply and demand is. Now, that wasn't public knowledge. But if you were a sizable player and had sizable order flow and you went into a trading stock, they know you meant business. And so they would help you and speak to you about where the order flow was, where was the supply, where was the demand. Okay, if you had a large buy order, you wanted to know where the supply was, and vice versa. So, in this day and age, you know, there are different ways to navigate that.
Hmm.
And one of them is there's a Superdome that we have and display every day on our sessions, and it's a Superdome. And a lot of the firms offer these domes, but these domes are not. This is a Superdome, and it shows the size of the order imbalances. Every depends what bar you're in, but if you're on a Nasdaq bar, it's 3,000 ticks I have set up, and 3,000 ticks will show in a 3,000 tick bar. It will show you the order imbalances with the size,
Hmm.
with the sizes. So you see the Nasdaq size coming in blue imbalance orders in size, and it gives you a little bit of an edge. Why? If I see the market shooting up, I mean I left early today, but if you see the market shooting up, it's at a high and an intraday cycle high, 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 okay, and you see the Superdome light up with blue imbalance orders. I'm watching that very closely because I know these buy orders, these buyers here, they're long at the top. So number one, I know that it's going to be a difficult road to really break out if you want to get short. I know that. And I do know also that I'm going to be covering my short when these people start to puke if they're wrong.
Hmm.
And so that's an edge. And we have a Superdome. It's expensive. Uh, it's not proprietary to us, but we own it, and it's I don't know anybody else that has this Superdome. I really don't. So that's relative to the specialist book,
Mm.
and not everybody that in my era or eras well before me and after me for that matter, the specialist book was the Bible. Because you don't want to look like an idiot by buying into a large seller that's just slightly above the market and vice versa on the downside. You don't want to sell into a huge buyer, so edges like that, it comes from the experience level. And so,
I think very interesting what you said there in terms of that, like depending on you and the size that you're sort of fulfilling and essentially your track record, if you will. Like there's a lot of talk about track record nowadays about traders, trying to acquire them, whether it's to get capital to prove themselves as traders. But the same happened back in the pit. Like if you didn't have the performance behind you to be able to handle that size, no one was going to give you that size.
100%,
So for you to be able to get the size that you got, you showed the skill
100%,
set, the track record to be able to handle it and then continue
100%,
to perform to this day.
100%. I mean, that's just the fact of the matter.
Mm.
And, I speak to my subscribers all the time about the volume weighted average. And the 80% of the order flow that comes down today, the volume weighted average is a huge factor. Why? Because the size of the positions today, with the amount of money under management, you can't have a million share position if you're managing $10 billion or 20 billion. Your positions are 20 million shares, 30 million shares. Okay, and 80%, give or take, it's probably more. 80% portfolio manager says, all right, I own XYZ. It's up substantially, and they own 20 million shares. I want to take off, 5% of that. Okay, so sell an order, take an order to sell 500,000 shares, 2 million shares, 1 million shares, and they give it to the trader on the desk, and they sell to the trader. Just, go along, beat the volume weighted average. 80% of the orders on these deep pocketed investors and funds have orders that are following an algorithm that allows them to stay close to the volume weighted average. Why? The trader doesn't want to be embarrassed. The portfolio manager doesn't really care. He's banking money, so he doesn't want anybody playing the market on his dime. He'd rather just know that he's about around the mid price of the stock that it trades for the day.
Mm.
But it's a very important factor when you're doing what I do, because where the volume weighted average is, if a new bar comes up on a Superdome, for instance, and the bar is above the volume weighted average, those orders that are in there following an algorithm on the volume weighted average are buyers. And when it's below the bar, they're sellers. And that's how they keep up. It's a balancing act. So the VWAP is really, really important. My clients, like what you just said, which prompted me to speak about this, is my clients, I represented Vanguard, and I represented their index funds. So every time a stock went from one S&P to 400 to 500, they restricted, and they had to balance the mathematics out to reflect what their index was.
Mm-hmm.
And so my customers, to your point, they didn't give me the order. I could put it on an algorithm too. No, they wanted me to trade the order and use my expertise.